Okay guys, rain, sleet, or snow, I am back with another crypto video. The first story I want to get into here is from Decrypt, and it reads, Kathy Wood's Ark Invest dumped $75 million in Coinbase stock. The third biggest shareholder of the largest US crypto exchange sold over 1.41 million shares of the company, worth almost $75 million. Ark Invest, the investment firm held by Kathy Wood, dumped a total of more than 1.4 million shares of Coinbase Global on Tuesday, per the firm's daily trade information newsletter. The sale is spread out across the company's three actively managed exchange funds: Ark Innovation, Next Generation Internet, and FinTech Innovation, with Ark selling as many as 1,133,495 coin shares. Coinbase stock closed Tuesday down 21% at $52.93, meaning Ark Invest disposed of near approximately $75 million worth of share in the San Francisco-based company. Ark Invest was Coinbase's third biggest shareholder, holding about 8.95 million shares at the end of June, according to Bloomberg. The firm has been buying Coinbase stock since the crypto exchange debuted on the Nasdaq in April of 2021, which with the latest major purchase of more than 500,000 shares worth $30 million happening in May. Ark, the firm's flagship ETF, was a big winner after hefty stock market gains in 2020. However, it plunged 57.84% since the start of the year, amid fears that monetary tightenings across the globe may severely dampen growth in stocks. So I'm gonna stop right there. At the end of the day, the more information that comes out, the more it looks like there's a very high probability of Coinbase going bankrupt. Like, to me, that's what it looks like. Again, I can't predict the future, but that's what it looks like to me. When you're seeing Coinbase is stopping their affiliate program, people like myself have had experienced deposit issues and withdrawal issues. Like, you're seeing a bunch of issues pile up. They fired a chunk of their staff, and now you're getting news that their third biggest shareholder just dumped $75 million worth of the stock, making the stock drop 21%. Seeing crypto dropping 21% doesn't sound like that big of a deal, obviously, because we've seen crazier. But in like the stock market world, that's devastating. Like, you drop 21% in like a day. Like, so to me, that's something that people really got to keep an eye on, man. Next story here reads, Unstoppable Domain reaches a unicorn valuation of $65 million Series A funding round. The Web3 startup behind NFT-based domain names is now at $1 billion as it expands its identity to push its reputation. Sorry, guys. Web3 startup Unstoppable Domains has raised $65 million at a $1 billion valuation. The firm sells NFT-based domains that can be assigned to crypto wallets and websites, and is building Web3 identity and reputation solutions. Unstoppable Domains, a Web3 service that provides NFT-based domain names for crypto wallets and websites, today announced it reached unicorn valuation of $1 billion after a $65 million Series A funding round. The raise was led by new investor Pantera Capital and includes funding from Mayfield, Academy Ventures, Redbeard Ventures, Polygon, CoinGecko, OKG Investments, and others. Previous backers Draper Associates and Boost Venture Capitalists also took part. Matthew Gold, founder and CEO of Unstoppable Domains, told Decrypt that everyone's excited at the firm about reaching unicorn status, and it built through the so-called crypto winter in 2018 and 2019 to eventually reach this point. But he also told his team that bringing in this kind of investment is a serious matter. When you take on funding, you take on a lot of responsibility, he said. You have one day to celebrate and take the victory lap and have a glass of champagne, and the next day you get right back to work. That, I mean, I'm gonna cut it short right there. Like, that to me, like, seeing that is just mind blowing. I'm not gonna say it's surprising, but it's still mind blowing to actually see it once things like that get solidified. It's not a surprise to me. At the end of the day, I do remember a couple years ago when Unstoppable Domains was first starting to like really pick up steam. I didn't get a domain at the time I wanted to, but I got too busy, and then the money that I was sparing I was using on crypto and not like something like this. I wanted to get into this, and I still can. We all can. But at the same time, the time might have passed. Like, who knows? But it's still interesting to see. Next story I want to get into here reads lack of crypto experts, a major concern for EU bank. The European Union's banking regulator admitted that it faces the lack of talent required to enforce new rules regulating the crypto industry. The European Banking Authority is worried about its ability to accommodate new crypto regulations due to come into force in 2025, with the lack of talent and logistics issues among the key problems it faces. One of the challenges, EBA chair Jose Manuel Campa said in an interview with the Financial Times, is that it'll only be roughly 2025 when the agency will know exactly which cryptocurrencies will be charged with supervising. Based in Paris and founded in 2011, the EBA is responsible for overseeing banking regulations across the European Union. It sets the standard for rules across the banking sector in all member states. The EU finalized its market and crypto assets legislative package in March this year. The new legislation puts a strong focus on stablecoins, seeking to achieve legal certainty for the crypto industry while ensuring financial stability across all 27 nations. So you're seeing as these companies, these governments and organizations, they keep trying to act as if like crypto is something they need to reject or outlaw or whatever, but then at the end of the day, what it really boils down to is they really need to prioritize finding people who are competent and have a good understanding in the crypto world. Like, they're putting out statements now saying they don't have enough people. Well, go look for people instead of making it difficult for people to, instead of these countries making it difficult for people to get any footing like America is. If you're a forward-thinking company, you should absolutely be going all out to bring in as many people, even from other countries, who can come in here and help you get a grasp of this new asset class. But I mean, that's just my opinion. And next story here is a story from Kevin Cage, and it reads,
"Not such a good idea."
And it reads, Kraken is under federal investigation, suspected of violating U.S. sanctions by allowing users in Iran and elsewhere to buy and sell digital tokens. Shout out to Kevin Cage. That was from Kevin Cage. That was a Kevin Cage post. But yeah, like at the end of the day, you're seeing whether it's Coinbase, Binance, now you're seeing Kraken, like one coin after the next. You're seeing a domino effect. You're seeing a domino effect of people coming in, of really these organizations trying to come in and either hit them with a heavy fine, or in some cases, who knows, they might be trying to like shut these different platforms down so they can start their own. Next story I want to get into here. Is from Michael Branch, and it reads, if it goes the same rate, USD coin will dethrone Tether's position as the biggest stablecoin on October 10th, 2022. Now, it's yet to be seen if that's gonna happen. I think it's possible. I don't know if it's gonna happen that soon, because people in crypto, they're so obsessed with like different dates of the year. And ironically, a lot of those dates they usually get wrong. But I do definitely think USD is positioned to overthrow Tether. Like, Tether is a ticking time bomb, whether people want to admit it or not. It's a ticking time bomb. So and then you look at some of the connections that the people behind, USD, Circle, whatever, like the connections they're making. It's looking as though like that's where things are heading. Next story I want to get into here is, and this is actually the last story I'm gonna get into for this video. It's a post from Brad Cons and JV, and it's a video clip of Kevin O'Leary speaking about stablecoins getting regulation this year. And in Kevin O'Leary's opinion, he thinks that based on who he's talked to, he's believing that stablecoins will probably get regulatory clarity way before anything else, which I think makes the most sense. And he further explains why he thinks so in this video.
Think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen.
That's right.
The most likely scenario, and this is a personal opinion, but one I've been working on in Washington along with others, is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. Mm-hmm. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. Mm-hmm. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stablecoin. Now, the proposed policy that you'll find in granular form in both the Haggerty and Toomey bills, and I've met with both of them, as many others have. This is very simple policy. What it looks as, it says, okay, for any stablecoin, an audit every 30 days. And any asset underlying, holding up the value of the coin or token, cannot have a duration of more than 12 months. Now, you've seen that policy before. It's called a money market fund, and you'll find it at Fidelity and Putnam and many other financial services entities that are FDIC insured. Circle, if it wished, that issues USDC, could become a bank. They could be FDIC insured if they wanted to, but they are sort of leading the pack with crypto in terms of payment systems under a stablecoin that has not broken a buck. So you've seen even Tether trades below $1. It's 0.999 right now. And so when you break a buck, you lose a lot of confidence. So what I'd like to see happen here is that we regulate stablecoins first, because